Okay, welcome to the deep dive. We're diving straight into your source material today. Specifically, a stack of articles and analysis focused right on Tesla stock. TSLA covering that week of May 24th through May 31st, 2025.
That's right. Think of this as, well, a custom shortcut based on what you sent over.
Exactly.
Our goal, to quickly pull out the key bits of info, cut through the noise, see what might be driving the stock, and maybe most importantly, understand what your sources suggest about potential investment strategies.
Short, medium, long term.
Exactly. Whether you're looking short, medium, or long term. Let's unpack this.
Absolutely. And this particular week, it really seems to paint an interesting picture, doesn't it? Like mixing some big future ideas with some very present-day challenges.
Definitely.
So what did your sources highlight first about the stock's actual movement during that period?
Okay, so zeroing in on those dates, your sources note Tesla had a pretty strong May overall. Yeah, reportedly up over 22% for the month. Now, that's even though it was still down year to date, maybe, 10 to 14% down?
Right. Still in the red for the year.
And by the end of that specific week, the price was hovering around $346 a share.
Got it. So a recent bounce back, at least in May. What were the sources pointing to as, possible reasons for that?
Well, one key piece that got flagged was the news around Elon Musk.
Okay.
Specifically, him announcing he was stepping back from a U.S. government role to focus more on his core companies, Tesla included, obviously.
And did the sources say that actually moved the needle?
One source specifically noted the stock jumped over 2% just on that announcement.
Okay, so the thinking there, according to that source anyway, was more Musk time equals good for Tesla investors. Is that the idea?
That was one interpretation, yeah. Suggesting, improved sentiment, maybe signaled more focus on execution, marketing the big plans.
And speaking of those big plans, robotaxi. That's still a huge theme in these sources, right?
Oh, absolutely. Musk is still talking about a launch happening soon. I think the aim mentioned was end of June.
Yeah, starting small, maybe, like Austin.
Potentially starting small scale in Austin. That potential launch is definitely framed as a possible short-term catalyst in one analysis you shared.
Okay, but I sense a but coming.
Well, yeah. This is where another source throws in a really crucial bit of contrast. While Tesla is talking about launching robotaxis soon, this source points out that Tesla isn't actually the leader in autonomous driving right now.
Really? Okay, so who did the sources say is ahead then?
Waymo, part of Alphabet, Google's parent company.
Ah, right, Waymo.
Yeah. Your sources highlight Waymo's been offering paid, genuinely driverless rides since 2022.
Since 2022, wow.
And they're seen as much further along in the autonomy level. Waymo's operating at level 4, fully driverless in certain areas. Tesla's autopilot and FSD, still considered level 2, meaning, you need active driver supervision.
So hang on. Waymo's already doing hundreds of thousands of driverless rides every week. And Tesla's plan is maybe starting with 10 cars soon.
That's the contrast the sources draw, yeah. It's pretty stark when you put it like that.
It really is.
And the challenge that gets flagged is this. For Tesla to hit some of those, frankly, incredible future price targets, the Cathie Wood $2,600 prediction relies heavily on robotaxi.
Right.
They need to scale that service massively and super quickly.
But that's hard if they're behind on the tech.
Exactly. Achieving that rapid, large-scale rollout is directly challenged by being, behind Waymo on the core tech. Plus, you have potential regulatory hurdles, liability stuff. One source kind of suggests Waymo's slower, maybe more cautious expansion might actually be the more realistic path, making those super aggressive Tesla timelines feel, ambitious.
Okay, so that's the future hype versus the current autonomous race reality.
Yeah.
What about the here and now, the core business? Your sources hit on that too, right?
They did. A really significant point across the board was the ongoing struggle with vehicle sales, particularly in Europe.
Yeah. I saw some numbers there. What did they say exactly?
One source reported Tesla's sales in Europe fell 49% year over year in April.
49%?
Yeah. And another cited new registrations down even more, 53% in the EU, which, really hammered Tesla's market share over there.
And the kicker is, your sources point out this is happening while the overall EV market in Europe is actually growing.
It is. That contrast is, it couldn't be much sharper.
So why the drop? What are the sources saying?
Well, they attribute it partly to what they call brand damage, maybe linked to Musk's political activities.
Okay.
And partly just competitive disadvantages. I mean, Tesla hasn't rolled out many truly new models in a while, right?
That's true. Model 3 and Y are getting older.
Exactly. Meanwhile, competitors, especially from China, are launching newer stuff, often cheaper alternatives, and people are buying them.
So sticking with those older models helped profits for a bit, maybe. But now it's catching up with them on sales volume.
That's the trade-off one analysis highlights, yeah.
Yeah.
And you can see the impact on the financials in those Q1 2025 numbers the sources reference.
Right, they weren't pretty.
No. Revenue dropped 13%, net income plunged, 71%?
Oof.
And the operating margin in the car part of the business also fell quite a bit. One source raises a pretty key concern here.
Which is?
If these sales declines keep accelerating, those operating margins could get, dangerously close to zero. Or even negative.
And why is that specific margin point so critical? Beyond just, making less money?
Because it directly hits Tesla's ability to fund all that massive R&D and capital spending needed for the future stuff.
The robo-taxi, the Optimus robots.
Exactly, all that exciting future vision. Even with a big pile of cash, if your core business isn't generating healthy margins, funding that super ambitious future becomes much, much harder. That's the concern raised in the analysis.
Okay, so that is a complex picture from your sources. You've got a stock that saw a recent bump, maybe on CEO-focused news, definitely on future hype like robotaxi. But it's wrestling with really significant current problems, falling sales, tough competition, and real questions about how fast and realistically they can deploy the future tech.
That sums it up pretty well.
So, given this whole mix, what did the sources actually suggest you, the listener, should maybe consider regarding investment strategies?
Right. How do you navigate these competing signals? And it's interesting because the two main analyses you shared, they actually offer slightly different takes, especially on the short term.
Okay, let's hear them. What did the first analysis say?
Okay, source analysis 1 presented this kind of view. For the short term, like within a month, it recommended sell or watch. Basically, hold off.
Why?
The reasoning was that the negative stuff, the poor recent results, the falling European sales, those were the dominant factors right now, suggesting the price was more likely to drop near term. So be conservative.
Okay, cautious short term. What about medium term?
For the medium term, say 3 to 6 months out, it recommended watch. Just observe.
Still cautious.
Yeah. The idea was you need to wait and see if any positives like Musk's focus actually translating to something, or news on new car platforms could start to outweigh the bad news and actually show up in improved performance.
Makes sense. And long term?
Long term, looking out 6 months or more, it recommended consider buy.
Okay. More positive there.
Right. The thinking here was more optimistic about long-term price increases, expecting those new vehicle platforms and, eventual autonomous tech advancements to drive growth, seeing that long-term potential despite the current headwinds.
Okay, so source 1. Cautious now, wait and see medium term, consider buying for the long haul. Got it. How about the other source? Did it agree?
Well, source analysis 2 took a noticeably different angle, especially short term.
Oh, how so?
For the short term, 1 to 3 months, it recommended buy or hold.
Buy or hold.
Yeah.
That's quite different from sell or watch.
It is. This view seemed to put more weight on those expected short-term catalysts. The potential robo-taxi launch announcement buzz, the positive feeling from the Musk-focused news.
So leaning into the hype a bit more.
It seems that way. It even suggested maybe taking some profit if the stock saw another quick surge.
Interesting. Okay, what about their medium-term view?
For the medium term, 3 to 12 months, it recommended hold or split buy.
Split buy, meaning buying in chunks.
Exactly, buying in increments. This view also stressed watching for actual performance recovery, seeing if new products actually succeed, but it explicitly acknowledged the risk from competition and suggested using split buying to kind of manage that risk.
Okay. And long-term for source 2?
Long-term, looking out a year or more, it also recommended buy or hold or head.
So similar to the first source on the long term then?
Broadly, yes. Positive on Tesla's long-term potential, pointing to things like its U.S. market position, tech, brand value, those future growth drivers, autonomy, robots, energy. But it also specifically cautioned investors must watch out for competition and, expect performance ups and downs.
Wow. Okay. That is a significant difference in the short-term advice. Sell or watch versus buy or hold
Yeah.
based on the same week's news. That really highlights the debate around this stock.
It really does. It's fascinating, isn't it, how two different analyses can look at largely the same set of facts from that specific week
Yeah.
and arrive at such different immediate conclusions. One seems to really zero in on the current fundamental challenges, sales, financial.
What's happening now?
Right. While the other gives more weight to potential future catalysts and maybe the prevailing investor mood, which is often driven by hype and, well, Musk's actions.
It definitely feels like Tesla is a stock where, as one source kind of hinted, the price often seems really influenced by belief. Belief in the future story, the marketing, maybe sometimes even more than the day-to-day nuts and bolts of selling cars right now.
That tension, today's reality versus tomorrow's dream, that's absolutely central to the whole narrative your sources are grappling with. And it seems both analyses fundamentally agree the long-term story around AI, autonomy, robots, energy. That's the key potential driver, even if they disagree on how quickly it happens or how big the hurdles are.
Right. It's notable they both leaned more positive long-term.
It is. But importantly, both also included those big caveats. You need to see execution. You need to watch the competition. It's not a blind buy recommendation from either, even long-term.
Okay, so pulling it all together from the sources you shared covering that specific week in late May 2025, we see Tesla getting a lift from sort of future hope and maybe renewed leader focus.
Right.
But at the same time, facing some pretty serious headwinds in the actual car business right now and some, let's say, reality checks in the autonomous race.
Yeah, and the investment strategies that flow from that, they range from being pretty cautious or even selling in the immediate short term, focusing on current performance,
Like source one.
to a view that maybe leans into those short-term catalysts and suggests holding or buying, like source two.
Right.
Then looking medium term, it's more about waiting for proof or managing risk. And longer term, generally more optimistic based on the big vision, but always with that asterisk about competition and needing to see results.
It really is quite the puzzle to navigate, isn't it? Balancing those current struggles against the potential for truly transformative tech that might still be years away.
It absolutely is. And, that leaves us with maybe a final thought for you, the listener, to chew on based purely on these sources. When you look at a company like this, with one foot seemingly stuck in today's tough market challenges and the other leaping towards a revolutionary, maybe distant future, how do you decide which one weighs more heavily in your own investment thinking?